Andrew, there's a lot of things going on as it relates to interest rates right now. A lot going on in the news.
Hot topic.
Very hot topic, Fed intervention. And we're got to a point now where the 10-year Treasury is kind of hovering around 4%.
Yep.
And, in our world, that starts to have some interesting impact on the economy, on equity valuations, on mortgage interest rates, which I think is probably what really people are kind of honing in on.
Absolutely.
What are you seeing and kind of what's your thought?
Well, I think I won't say we can all agree. I think that there's a sentiment out there that the Fed has been a little bit behind on lowering interest rates, and you've had a lot of people talk about they should have done it sooner. But here's the deal. We are where we are.
Right.
You bring up an excellent point. The 10-year Treasury is hovering right around 4%, and that's kind of a bellwether as far as if it drops below 4%, historically, we're going to see a lot of expansion. Right?
Yeah, a lot of activity.
And a lot of activity. Why does that matter to the consumer and to the people that are logging on and hearing this? First of all, it has the potential of really lowering mortgage rates.
Yeah.
And I think we probably aren't going to get back to the levels we were before.
Probably
There's a lot of people out there that have sub 4.
Oh. Sub 3 in some cases.
Yeah, sub 4%, sub 3% interest rates that they locked in at 30-year mortgages, which is incredible.
It's almost an asset at that point. But
And at that point, we've kind of locked up the housing market. But what has happened where interest rates have been is you haven't had a lot of movement. You have people that are looking at sub 4 interest rates saying, hey, I'm not going to move into a 6-7% mortgage. But yet they do want to move. They need to expand houses.
Right.
And it's not just the housing market, Craig, when you think about it. It's all of the commercial real estate. It's investment real estate. It's been locked
even
up.
Borrowing costs of growth, just overall growth in the economy.
100%. 100%. So when we look at the 10-year, if we drop that down below that 4% and we can sustain there, historically, we've seen market expansion. You're going to have interest rates for borrowing costs, as you mentioned. You'll have mergers and M&A activity, because borrowing costs, as they come down, it becomes much more palatable to go out and buy companies with leverage.
That's right.
Which is in essence what it is. And so I think that we're kind of at that inflection point, right? And Powell, the Fed, the Federal Reserve has mentioned potential 2 more rate cuts maybe.
Right.
They kind of forecasted maybe another next year. I think the fact they're easing off the balance sheet, the quantitative tightening, which basically was they're rolling their balance sheet off, is also they're going to slow some of that down.
Yeah.
Why that's impactful to the consumer? It frees up liquidity. All of those things I think are pointing towards growth. Now, how does that matter for us? When we get lower interest rates, when our investment advisory committee is looking at which sectors and where to go into, you start thinking about expansion. You start thinking about building. You start thinking about home builders. You start thinking about mortgage lenders. All of those types of things that have kind of been locked up. So I think the way that we look to manage money is volatility is here to stay. We talk about that a lot.
That's right.
But some of the things we don't talk about is how we move within sector.
That's right.
We're going into the sectors that we see are opportunistic, very different than a traditional buy and hold strategy. And I think if we can get lower interest rates, we drop that 10-year down below 4, we can historically stay there or historically get down below that level. I think there's a lot of really good things to come.
I was going to say the same thing. I think there's a lot of good things to come with some of this news and where the momentum is going.
And I think we're positioned well.
Yeah, agreed.
If you'd like to learn more, check out prevailiws.com or talk with one of our advisors.